Happy Monday, everyone. Hope you had an excellent weekend. Go ahead, grab your water, grab your coffee. It is time for this week's market update. So first, let's talk about housing wealth. Did you know there's 136 million households in the United States? Of those 136, 91 million own their own homes, with 45 million renting. Here's the staggering part and why this is important. Homeowners collectively hold over $37 trillion in equity. That's trillion with a TR, not a B, not an M, trillion. That's just over $400,000 per household. Let's break that down a little further. Of those 91 million that are owned, about 35 million are owned free and clear. And of those that are owned free and clear, they hold about $20 trillion in equity, which means there's an average of $571,000 of equity per household. Well, let's look at those that have mortgages still. 56 million houses do have mortgages, but they still hold over $17 trillion in equity, averaging about $311,000 per household themselves. This is why homeownership continues to be a key driver of wealth. And with over $200,000 in tappable equity per household, there's incredible potential for debt consolidation, home upgrades, or other investment opportunities. Now, what's next for home prices? Well, the latest home price expectation survey from Fannie Mae, Zillow, and Pulsenomics, they predict a 5.9% appreciation year over year. Now, over the next 5 years, we could see a cumulative appreciation of 27%, adding roughly $135,000 in equity for a $500,000 home that is bought today. But here's the thing, that's not all that's driving demand. Immigration is surging, adding 700,000 more households than usual in the past 3 years alone. Of those 700,000, 600,000 are renting and 100,000 have purchased homes, and this pushes demand higher for both the rental market and the home ownership market. And here's an interesting twist. Cryptocurrency wealth is playing a role in the housing market. Crypto has been by far the best performing asset class over the last decade, creating almost $2 trillion in wealth this year alone. Studies are showing that crypto investors are twice as likely to use their gains to purchase real estate, driving up home value. With younger adults being the biggest group of crypto owners, there's a huge opportunity to convert those gains into tangible assets like homes. For example, 29% of adults aged 18 to 29 own crypto, but only 8% are homeowners. As crypto prices rise, we could see more of this group entering the housing market and boosting demand even further. Now, let's take a look at what's moving the market this week. CPI data is coming out tomorrow. It could be a major market mover. We also have a 10-year Treasury auction on Wednesday and the PPI data on Thursday. As for the rates, well, mortgage bonds are holding above the 100-day moving average, which is a positive sign for rates. The 10-year Treasury is hovering near its 50-day moving average, and we're watching closely to see if yields can stay in check. So let's wrap it up. Home ownership continues to be a major wealth building tool with $37 trillion in equity across the US. Strong appreciation forecasts and new demand from immigration and crypto wealth could push values even higher. Stay tuned for market movers like the CPI, PPI, and Treasury yields this week. They'll be key for mortgage rates. And that's pretty much it. Thanks for tuning in today. If you have any questions about how these trends could impact you or your clients, please drop a comment or reach out. I'd love to connect. Have an amazing day, and I will see you next week.